I'm Pat Keon, a Senior Research Analyst with Lipper. I'm here to speak to you about the fund flows activity for the week ended Wednesday, October 30th. We'll start this week's report by taking a quick look at the market activity. Equity markets posted gains for the fund flows trading week thanks to continued strength from the quarterly corporate results season. Optimism about the U.S.-China trade talks and the Federal Reserve cutting interest rates another 25 basis points as expected. For the week, the NASDAQ Composite, the S&P 500, and the Dow Jones Industrial Average were up 2.3%, 1.4%, and 1.3% respectively. All three of these indices are also in the black for the quarter and the year to date. The NASDAQ has appreciated 25.2% so far this year and 3.8% for the quarter, followed by the S&P 500 and the Dow, which have gained 21.5% and 16.5% for the year and 2.4% and 1% respectively during the fourth quarter. As anticipated, the Fed reduced interest rates for the third time this year at its Federal Open Market Committee meeting on Wednesday, October 30th. This action dropped the federal funds rate to the 1.5% to 1.75% range, but the Fed's post-meeting statement seemed to indicate that there would be a higher standard for any future rate cuts. This was inferred by a change in the language in the Fed's policy statement. The policy statements after the last three meetings, including language speaking to the Fed's actions, would be for the purpose of extending the current economic expansion for as long as possible. This statement was removed from the current policy statement and replaced with language indicating that the Fed would monitor the incoming economic data and economic forecasts to determine its appropriate target rate. Let's turn our attention back now to the week's fund flows results. We'll start by taking a look at our fund macro groups. For the week, equity mutual funds suffered net outflows of $2.8 billion. Taxable bond and muni bond funds took in $1.5 billion and $922 million respectively, while money market funds had the largest net inflow for the week at $23.5 billion. We'll now explore the changes in each one of these asset groups more closely, starting with the equity mutual fund group. The $2.8 billion net negative flow marked the 37th straight weekly net outflow for the group. During this time period, the group has seen its coffers shrink by almost $190 billion. The group is on pace to have its second worst annual net outflow ever, trailing only the $258 billion it suffered through in 2016. This week's net negative flows were attributable to both non-domestic equity and domestic equity funds, which had net outflows of approximately $2 billion and $900 million respectively. The largest net outflows in the two regions belong to the international multi-cap growth funds and multi-cap core funds peer group at roughly $375 million and $600 million respectively. We'll move on to our equity ETF group now. Equity ETFs recorded their third straight weekly increase as they took in $3.5 billion of net new money. These inflows were driven by the SPDR S&P Dividend ETF and the Invesco QQQ Trust product, which had net inflows of $1.4 billion and $985 million respectively. The largest individual net outflow belonged to the SPDR S&P 500 ETF at $2.5 billion. We'll turn our attention now to taxable bond funds, starting with the mutual fund side of the ledger. This group had net inflows of just about $1.5 billion for the week. It was their fourth straight weekly net increase. The largest positive net flows among the peer groups belong to the short investment grade debt funds and the multi-sector income funds groups, which took in $1.3 billion and $50 million respectively. Our next group to review is taxable bond ETFs. This group also had positive net inflows. They took in about $3.7 billion of net new money. The largest individual net inflow belonged to the iShares iBoxx Dollar High Yield Corporate Bond ETF and the Schwab Short-Term U.S. Treasury ETF, which had positive net flows of $523 million and $375 million respectively. The iShares Short-Term Corporate Bond product had the largest individual net outflow at $78 million. Let's turn our attention to the Muni Bond Fund group now. This group ran their string of weekly net inflows to 43 as they took in $1.2 billion of net new money. The net inflows were once again concentrated in national muni peer groups as general muni debt funds and high yield muni debt funds led the way with net inflows of $655 million and $365 million. Year to date, this group is up almost $75 billion, is on pace to surpass its largest annual net inflow ever of $81 billion in 2009. Our last group to review is money market funds. Money market funds paced the net inflows among the fund asset groups this week as they took in $23.5 billion. The lion's share of the group's net positive flows came from the institutional U.S. government money market funds peer group at $23.7 billion, while conversely, the institutional money market funds and U.S. government money market funds groups saw approximately $1 billion and $943 million leave. That wraps up this week's report. If you'd like to take a close look at the data for yourself, please go to our website at www.lipperusfundflows.com, and please join us here again next week where another one of our analysts will be speaking about that week's fund flows activity.